Hello, fellow bookkeepers. Sarah here from smallbusinesssarah.com, and today I'm going to show you some tips and tricks on how to review bookkeeping that has been done by someone else. So this situation may arise when either you are inheriting some bookkeeping or a client that was previously handled by another bookkeeper, and you kind of need to take a look at their past work and get an idea of how they did and where things stand, that sort of thing. This situation could also arise when you begin to hire bookkeepers that work for you, and they are doing bookkeeping work, and you need to check their work without checking every tiny little thing that they did. So these are just the tips and the tricks that I use to kind of give myself a quick overview of how things stand and a quick way to identify errors that may have been done in the bookkeeping. This is certainly not the only way to go about reviewing. You could certainly go more in depth, looking at every single transaction, how it was categorized, but this is kind of like the top level review so that you can review quickly, but also catch any major mistakes that might have been done in the bookkeeping previously. So let's get started looking at all of those details. So when I begin to review the bookkeeping work done by someone else, one of the first things I want to do is figure out what the last date is that they have reconciled the checking, credit card, PayPal accounts to. So I use the accountant's tool, and from here I can get a quick lay of the land of what balance sheet accounts the client has, and then as of what date the account has been formally reconciled through. So this kind of just gives me a good basis of where I'm starting from. Next, I tend to head to the registers. It may surprise you, but I really don't take a look at the categorized transactions. I tend to take a higher level overview, and for me, looking at the registers is a bit more helpful, especially the registers of the non-traditional accounts. So if checking has been reconciled, I don't spend too much time on the checking register. Instead, I would probably go to the holding account registers, see where those have been left off. If you're using A2X, definitely all of the registers related to the A2X holding and carried balances accounts, I look at those in more detail. For accounts that are difficult to reconcile, so for example, PayPal, even though it said it was reconciled through 2/28, I might take a look at that and just verify that, okay, they're reconciled through here, but oftentimes people that really don't know how to reconcile will have a bunch of unreconciled items mixed in with their reconciled. So if I was seeing a lot of C's in the register along with a lot of the R's for reconciled, then I would know that we have a problem that even though it says it's reconciled through 2/28, it probably wouldn't. So the PayPal register is definitely something that I hit when I am doing an overall review. So we're looking at reconciliations and how far things are reconciled, taking a closer look at the more interesting registers, PayPal, holding accounts for e-commerce platforms. Next, I head to the balance sheet. I actually use the balance sheet for review purposes way more than I use the profit and loss statement, which may surprise some of you listening. The balance sheet is really the most important tool to know if your bookkeeping is in good shape or not. It's not a big deal, at least in my mind, if someone categorized an office supply to a online tools expense account. The expense is still there. So those are the kind of mistakes that you might catch if you were doing a very detailed analysis of every item that was categorized, but that's not what we're going for here. We're not looking to recheck every single item that was done in a bookkeeping month. We're just trying to do a broad overview. So the balance sheet can provide information about things that have not been done or have been done incorrectly. And things that have been done incorrectly and affect the balance sheet tend to then affect the profit and loss statement. So for example, in this scenario, I would take a look here and I would immediately flag these negative balances in our asset accounts as problematic. And I would go back and I would take a closer look at PayPal, and I would go back and I would take a closer look at Shopify Holding to understand either are these balances correct, or more than likely what mistake has been made that needs to be fixed. In this scenario, it's probably the journal entry that has failed to be posted, and so that needs to be posted. So anything negative on your balance sheet is worth investigation usually. Even down here in the liabilities section, a liability doesn't show up as a negative, it still shows up as a positive. So if we see negative amounts here, then we need to dig in deeper through that register, look at the reconciliations, find the errors, etc. Sales tax is another section that I tend to put a little time into. If the sales tax balance is growing and not being paid off, that's something to look into. Or if there is a balance when there shouldn't be. Now that Etsy is collecting sales tax for almost every transaction on their website and remitting the tax, for a seller who's just on Etsy, and a sales tax balance should not be growing. If they're selling on other platforms, that's a different story, but understanding where your client is selling and therefore what that means is an important part of this process. So the balance sheet really tells me a lot of good information about where I need to spend my time investigating differences. So then I would head to the profit and loss report at this point in time. And I tend to just kind of scan it for reasonableness. Hopefully I have a little bit of an understanding of what is going on with the client. For example, if there was a different type of income that I'm expecting to see and I don't see it, that can be a good catch. For example, if we hadn't posted our Shopify journal entry for the whole year, we wouldn't see Shopify income here, and that would be a flag to us. And then once again, I just scan the expenses for anything out of the ordinary. So that would be anything like way huger than I think it should be, or even way smaller, although it's probably easier to see the way larger expenses. But also negative. Sometimes you will see a negative in the expense section, and sometimes that's normal if there was a return of an item and the timing is just different, but that's a clue to investigate. The other area that I do tend to look at more closely after I scan everything for reasonableness is the taxes and licenses. I always click on this account and make sure that the items shown here are not actually, in fact, sales tax payments, state estimated payments, federal estimated payments. Those are items that would affect the profit and loss if something has been categorized to taxes and licenses that really belongs on the balance sheet. Reducing sales tax, being added to federal or state estimated tax payments, that affects the profit and loss. So that's a key area to look into. I might also kind of just take a brief look at one of the accounts that's being used a lot just for reasonableness. So like online tools, can kind of take a look what's being categorized here. Does that look reasonable? Are we adding the vendor names as we should be to pretty much every purchase? That sort of thing. So I really don't dive, like I said, in detail into a lot of these categories, because if, for example, an office supply got coded to legal and professional, it's really not the end of the world, because in total, the net income is still fine. It's the balance sheet that's really going to provide the insight into areas that contain errors and that need to be looked into and adjusted, and those balance sheet errors then tend to reflect on the profit and loss later. The last thing that can be done, and I don't do this on a monthly basis if I'm reviewing another bookkeeper's work, but it can be a helpful tool if you're taking over a new client, is to run a profit and loss by month. So it would be this year. So now you have some comparison. You can also compare this year to last year. There's a profit and loss comparison report you could run. So we've got, our sales figures, and they're pretty consistent, a big jump. Well, that might be worth a question. That might be worth investigating, clicking on that, taking a look, making sure that's correct. Here you'll notice we've got our Shopify sales recorded and then nothing. So that's a clue. Okay, I need to investigate. Should there be a value there or not? And you'll see how that all works together. We noticed on the balance sheet that the Shopify holding account was negative. Well, that's connected to why we're also not seeing any income value here. So it's all interconnected. So I might even, look here. Okay, well, there's a huge amount of cost of goods sold, but then not very much. What could be the reason for that? Just taking a look for reasonableness, looking for anything large that jumps out at you, looking for anything, once again, negative amounts that don't make sense, overall trends. It's just a good way to get an eye on how things usually work and checking for things that are anomalies or out of the ordinary. So those are the main ways that I conduct a review, either for a client where I'm taking over from another bookkeeper, or a monthly review where bookkeepers have done some bookkeeping work and I need to check it. So checking for reconciliation dates, checking the registers, especially the unusual registers. Balance sheet is huge. I spend most of my time on the balance sheet. Checking the taxes and licenses account on the profit and loss, and then possibly running this profit and loss by month. But I do this step less often than I do the others. I know I keep coming back to it, but it's the balance sheet. It's the most important thing to check when you're reviewing bookkeeping work. That's all I have for you. And if this has been helpful, I would really appreciate your like, subscribe, or your super thanks. Have a great day.